Hello everyone, thank you very much for joining me for today's daily snapshot. Today we're going to look at the DAX breakout and how to trade it. But before we do that, please take note of this important information. Know that CFDs are high risk products and that you should be completely aware of the risks that they pose. Also, please know that this is general commentary only and does not constitute investment advice. And lastly, our sources of information. Thank you very much. Let's get on with it. Okay, the DAX is rising on the signs of global economic recovery and the hopes of further stimulus. We want to draw your attention to the services PMI and the manufacturing PMI. So the German final services PMI came in today at 52.5, which beat the forecast and last month's print of 50.8. On Tuesday, the German final manufacturing PMI came in at 52.2 and beat last month's 53 and the forecast of 53. Now the 52.5 for services and the 52.2 for manufacturing is effectively showing that the services and the manufacturing sectors expanded during the month of August. The ECB is of course expected to follow the Fed's lead to tolerate inflation spikes. Having said all of this, when we take a look at the DAX, we can see that there was a really big blue candle yesterday, and effectively what they did was seems to have taken the DAX out of a range. Okay, it looks as if it's taken the DAX out of some sort of rectangle range, perhaps some sort of ascending triangle. What's interesting to note, of course, is that the RSI over here is well within normal means. So as long as the RSI maintains above 50 and doesn't go extreme, one would expect that the underlying bullish momentum stays and the trend builds. However, what's interesting is we want to just take a look at the S&P 500 now, which is something that we looked at 2 days ago. And the S&P 500 is showing signs of excess. So this is the daily chart, same time frame as we've just seen on the DAX. This is a very overbought chart. Now what we're going to do is we're going to bring up our correlation coefficient, and this is coming from tradingview.com. What you can see is we've got the DAX, so this is the chart of the DAX, and the correlation coefficient is measuring the DAX against the S&P 500, and you can see that it is a positive correlation coefficient and it's moving upwards towards 1. Okay, so there's a fairly strong correlation between the SPX and the DAX. That means that the DAX, although not overbought in of itself, may be importing short-term risk from the S&P 500 because that S&P is at elevated levels. Let's just end off with some key takeaways here. And the German manufacturing and services sectors are showing expansion. The ECB is expected to remain loose. However, the positive correlation coefficient suggests that the DAX may be importing short-term risk from the US markets. Therefore, upside gains may be capped in the near term. If there's any pullback, dips will be persuasive. Thank you very much for joining me. I hope you found the snapshot useful. If you did, please click on the subscribe button below, and I look forward to speaking with you again in the near future.